Chat Stocks. This is our weekly Power Hour episode. I'm one of your hosts, Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. On these episodes, we talk all things financial markets, any financial news, earnings, companies we find interesting. Basically, it's an open-ended conversation of anything finance and investing related. And today, we are at the heart of earnings season. So, Brett, how is it? This is busy time.
It is, yeah. Big tech this week. Amazon, Apple just reported right before we are recording this. We'll make sure to talk about those. What was it yesterday? Meta, Microsoft was some pretty blowout numbers. Although I think many people are forgetting that the quarter ends on March 31st and all the tariff chaos, or the majority of it, came in April. So TBD on that front. But yeah, lots of stuff out there. Some stuff I follow on the watch list. Spotify, we'll talk about some stuff I own. Airbnb, little Mexican airports reported this week. Should be fun.
Before we get to our content for this week, we want to talk about Interactive Brokers. They are the professionals' gateway to the world's markets. Interactive Brokers offers commissions starting at $0 on US listed stocks and ETFs with low commissions on other products, and there are no added spreads, ticket charges, or account minimums. Clients in over 200 countries and territories trade stocks, options, futures, currencies, bonds, funds, and more on 160 global markets from a single unified platform. Clients earn interest rates of up to 3.83% on instantly available cash and pay margin rates up to 53% lower than the industry. You can also earn extra income on your lendable shares, and IBKR's powerful, award-winning trading platform helps every level investor succeed from beginner to advanced on mobile, web, and desktop. When placing your money, go with a broker you can trust. Make sure your broker is secure and you can endure through good and bad times. We use IBKR here at Chit Chat Stocks for their best-in-class international coverage, and you can too by heading on over to ibkr.com. Interactive Brokers is a member of SIPC. Okay, we are in the heart of it. I think today might be the busiest day of the quarter, like in terms of total number of companies reporting. And we've got some of the biggest ones as well. We are recording this on Thursday. We go live on Thursdays at 5 o'clock Eastern time on YouTube for anyone that's listening. Where do you want to start, Brett?
Let's hit the top of the document. Microsoft. What were the numbers? Why? If I'm going to look at the stock right now, I believe it's up close to, yeah, almost finished up 8% today. What happened?
Yeah, I mean, the biggest thing is that there was good cloud growth. I will say Azure, Microsoft in general, they kind of restated how they report things last year, which does give us a little more clarity on cloud specifically as opposed to just like cloud vaguely. Like it used to be just intelligent cloud and it was kind of like a lot of different services lumped into one. But now we get a look at Azure and other cloud services growth, which the standout here, and now that we have Amazon's numbers, is actually even more of a standout. Azure and other cloud services grew 35% year over year in constant currency. Amazon Web Services and Google Cloud, and keep in mind, sorry, the big thing here is that they accelerated revenue growth. Azure did during a quarter when Google and Amazon both saw big deceleration. So typically, I think for the most part, we tend to see all the cloud providers kind of grow in tandem with one another. Historically, that's kind of been the trend. We saw the big dip in Q3, or sorry, in 2023 with both AWS, GCP, and Azure. This was probably the starkest difference of a quarter I've seen, where we saw a big acceleration from Azure specifically and big declines from Google Cloud and AWS. So maybe there's more lumped into the Azure and other services definition than pure cloud storage, but basically it seems like they were kind of an outperformer in the cloud industry. All the results were pretty good in general. I thought all the big three cloud providers saw pretty strong numbers, but I think what got investors excited was on the conference call. I think it was Amy Hood, the CFO, it might have been Satya Nadella, I didn't check, said, in our AI services, while we continue to bring data center capacity online as planned, demand is growing a bit faster. Therefore, we now expect to have some AI capacity constraints beyond June. That's all you got to say. We're capacity constrained, and boom, stock is up.
Yep, the AI boom continues. This really seems like an OpenAI story. I would guess, given the numbers here, because we're seeing OpenAI's users, their usage, just the anecdotes around that. We don't have solid numbers, but they seem to have had a good end to 2024 and a great start to 2025. That seems to be about it here.
Yeah, and I kind of posed this discussion question because I was looking at, if you go line by line across Microsoft's business from Office 365 for consumers, Office 365 for commercial, Dynamics 365, LinkedIn, even search and news, which is a little, it's kind of trivial. The only one that did not, I think, was like their hardware segment, and gaming was a little slow, but they had pretty good growth across all their categories. So my question to you is, of the Mag 7, all the Mag 7 stocks, and I'm going to put Broadcom in there instead of Tesla. You can call it the Mag 8 if you
They're
want.
larger now, right? So they're
I think
market cap
so.
wise. Yeah.
Is this the most bulletproof of the Mag 7? Do you think this is the least likely company to get impacted by macro effects?
Maybe. Depends what type of macro effects. Is it an AI macro effect? Because if so, maybe they get hit the worst from their cloud because AWS has the least exposure to, I think, just AI revenue at the moment. But if we're talking about in general bulletproof businesses, I think the cloud segment, obviously, it's a very durable business. I mean, look at how just consistent that segment has grown. Office for commercial users also seems very durable. No one's gonna rip and replace that anytime soon. And if people do, it's slow. There's just a lot of friction, switching costs, very, very high switching cost business. But those two businesses I think are good, but everything else about Microsoft's business I dislike. I mean, LinkedIn, I don't think is bulletproof. Consumer Office, no. Gaming is probably a huge black hole. Not a huge black hole, but for the size of this company, but is probably losing a ton of money, especially if you include the money they spent on Activision Blizzard. And that's not going to matter because those two that I mentioned that are great businesses are going to push, those are the two ones that really matter. But besides that, no, yeah, it's really a bet on cloud and commercial office. Copilot is, I would say, a total joke. Their AI initials, like their okay. There's a difference between the OpenAI partnership and what Microsoft is actually deploying themselves in AI, and they seem to be well behind any of the competition. There's lots of stories out there that Altman and Nadella are not friendly anymore. They apparently, and I know this was funny, but this is what they actually used as their anecdotes. Apparently, they used to text constantly, and now they only communicate through formal conference calls between their two companies. So I think Nadella realizes that OpenAI was a Trojan horse, and they're going to try to steal a lot of the operating system from them. So yeah, no, I don't know if it's any more bulletproof than the other businesses. There's AI risk here, there's AI potential, but it's an uncertain time for all of these companies. And if the AI boom is continues and it's as big as all these people think, there is a huge opportunity for a company like Microsoft, but there's also a lot of risks.
Yeah, I think I might give it to them. Just looking at the Mag 7 and kind of some of the macro headwinds out there today. Obviously, the tariffs kind of is random, threw a wrench in it. I maybe would have given this to Amazon if you asked me a year ago.
The
But
tariff specifically, yeah, I agree with you on Amazon. And Microsoft, they're not as exposed to consumer advertising or consumer spending, where Apple doesn't have that much consumer advertising spend, but they are big on consumer discretionary purchases. So, yeah, probably agree.
yeah, I mean,
I
it's
just
just
don't know if Microsoft's a bulletproof business.
no. I mean, I wouldn't call it a bulletproof stock, but I think the place I don't know if there's any company more integrated in the business world in corporate America than Microsoft between Azure and Office 365. It seems like they're probably one of the most integrated, and I'd much rather in terms of stickiness, I think it's better to be in the corporate world than and they serve consumers as well, but less cyclicality, I guess, there.
Right. And the consumer side of things, I don't think is meaningful to the revenue anymore. I'm no expert on the company, but that business, I don't think is very good, given that a lot of the stuff is given away from free from Google now. But like, if you're someone that's buying as an individual buying Microsoft Office, I have some questions for you on what your choices are. There's a lot of stuff out there that's free. But yeah, I mean, I agree. The stuff within the companies, within corporate spending, yeah, it's rock solid. Should continue. Maybe won't grow that much in a downturn, but it's much less, at least I would think, much less cyclical than Google advertising spending on Meta platforms, or Amazon and Apple.
Yeah. And last week during our power hour, I talked about Google's earnings report. I really liked it. There was a lot to like. However, I will say I've kind of going back to the report, there is one big thing that I kind of soured on and I did not appreciate enough, which
Lay it
was
on me.
they break out. So they've got the search revenue, which headline number looked good, but they break it out into paid clicks and then cost per click, so or revenue per click. Paid clicks only grew 2% year over year. That is that is the slowest growth in paid clicks I think they've maybe ever reported. And I don't see how there could be any other culprit than searches potentially going elsewhere. That
Yeah, yeah.
there's some, AI kind of cannibalizing some of those searches for them. So that part to me,
Yeah, if anyone thought that that wasn't happening at this point, I mean, just look at how much Google's internal stuff plus all the competitors are being used today. If anyone thought that wasn't happening, I just think they were being blind.
sure, but when you see search revenue grew 9%, you kind of think search queries and clicks is somewhere, close to that. But when you actually had revenue per click growing 7% and paid clicks only growing 2%, I don't know, that kind of caught me off guard. So maybe it's not quite as bulletproof as I thought initially. I do like
Oh no, Google,
all
no,
the
no,
other
it's not bullet.
businesses in general, but
Google search is not bulletproof. I mean, look at how many users OpenAI has. Look at how many they have. That's a lot of users. Now, are they burning a ton of money right now? I mean, assuredly. But they have backers that are giving them tens and tens of billions of dollars. So they're going to be a competitor for a long while here. Are Alphabet's products rock solid too? Like, is Gemini good? Yeah, I have the Google One subscription for the storage, and I got a nice little discount. I found the deep research tool nice. I've been starting to use it out, or starting to use it, but their user base is what, 10% of OpenAI's if you talk about Gemini. So they're in a good position, and they have the billions of users on Google search, YouTube, and whatever to transition people over to these products. But right now, OpenAI is winning in stealing and in getting user adoption.
are you seeing it anecdotally, like among friends, colleagues, anything? Are you seeing people use OpenAI or ChatGPT more as like an actual part of their workflow?
It seems like people are mentioning it more, but it's hard to tell. I mean, I'm not, I guess, I don't have spyware to look at what people are doing on computers. So I think trusting the data is better. We have a question here from Tyler, always joining, always asking a good question. Thoughts on how well Amazon, Meta, and Apple are navigating the tariffs given their results and guidances? I think that leads into what earnings should we talk about next, Ryan? Amazon, Apple, or Meta?
Let's talk Amazon. I think that's probably the most exciting of those three.
All right. Well, I'll go through the numbers. I guess we both kind of loaded some up here. Then we can talk about the results. Net sales up 9%, AWS up 17%. What was that Microsoft number? 35. So yeah, I mean, huge difference there. And it seems like Microsoft is really capturing a lot of that AI spending. Operating margin, 11.8% growth versus 10.7% a year ago. And that's probably due to 17.7% growth in advertising and 9.3% growth in subscriptions. As of this writing, Ryan, and I think we're in the middle of the conference call now, so let me do a little double check on here in case they said something. But yeah, stock's down about 5% after hours. Market cap's around $2 trillion. Are you a buyer here? What did you think of the report? In reference to that question on tariffs, I'd be interested to see what they say on the conference call because these results are pretty much all pre-tariff. So we got to know what's happening in the month of April. And to be honest, April is not going to have much of a tariff impact on consumers anyways because it takes a month to get ships over from China. So May and June is where you really got to watch out for that. All this stuff, like people are saying, oh, Visa, good numbers. Well, yeah, I mean, if anything, they got benefited by tariffs by the pull forward. So the numbers, like trailing, they can be all good, but it's all about what is happening in the guidance, and the trucking numbers and the airline numbers don't look good. But besides that, back to Amazon. Ryan, what did you think of the quarter?
Yeah, actually, when I look out across all the earnings I've read this quarter so far, it's been a little boring where the numbers have been good.
Yeah, fine. Yeah.
And then the conference call is just pure uncertainty. Like everyone's
Yeah.
like, we're seeing weak consumer demand. We're not really sure. We don't have that much like confidence in our guidance. We've seen a lot of companies pull guidance, and like everyone asks tariffs, and every management team's like, we don't know. We don't know what the impact's going to be
Right.
because
It's a lot of I don't know, which I think if we're going to be fair, I think executives should be doing that all the time because they don't know what's going to happen throughout the rest of the year. My favorite is when a company lines up like we think revenue growth is going to grow from 7.5% to 8% in 2025. It's like, really? Nothing else could affect that this year. I like the alphabet model of never giving out guidance. It makes it easier. But
let
Amazon's quarter
me,
was good,
yeah.
I thought.
Now let me get you excited with this quote. First quote from Andy Jassy. I don't know if you read it, but on the press release, he says, "We are pleased with the start to 2025, especially our pace of innovation and progress in continuing to improve customer experiences." Wait for it. From Alexa Plus, our next generation of Alexa that's meaningfully smarter, more capable, and takes action for customers, to another delivery speed record for our Prime members, which is totally legitimate. But we all know how much you love Alexa. Do you appreciate the investment and the resources being poured into that?
Oh, yeah, looks again, if I was getting a little bit bearish on Microsoft's internal AI tools that no one is using, I mean, people talk about Alphabet AI risk. At least they're trying versus OpenAI. Alexa's nothing. No one's using this, right? What about Rufus? You heard about Rufus? Do you know what this is?
Why do I know that name?
It's because that is Amazon.com's or Amazon's app, the consumer side of things. It's your AI tool when shopping on there. I don't think a soul is using Rufus. It's also a terrible name. And yeah, the numbers are good, but despite that, they're going to be investing in this stuff. They just can't get consumer AI right at all. No,
Hey, I still use Alexa for my grocery list.
great. That's making a lot of money for them.
Must be a
That
huge
is,
revenue generator for them.
beautiful, beautiful. Yeah, I like this. The prime, the daily. Sorry, the time spent on shipping. I love that. That's a KPI for them. If that keeps going down, more people are going to shop there for their everyday needs.
Yeah. I mean, it's one of those things that you would have thought like you become desensitized to after them doing this for 10 years. But honestly, every time I buy something on Amazon, I'm impressed with the speed. Like
Yeah,
the
and then you
speed
go
of
somewhere else and
delivery.
you go a week. Ah, my gosh.
I'm going to go to the store. I have to. Yeah.
Yeah, exactly,
Amazon has
exactly.
honestly, for me, and I'm sure there are people like more avid shoppers that came across this realization 5 years ago, but it has I'm a big last minute shopper, and I have honestly not needed to go to the store as much because you can get it so quick with Amazon. Now, numbers wise, I thought it was pretty strong across the board. Uh, AWS 17% growth. That's coming off the largest base relative to the other uh, cloud giants. Advertising was really strong, plus 18%. And that I maybe this is like anyone that follows Amazon might already know this, but I think that's probably the biggest profit driver for the business, advertising.
Yeah, excluding AWS.
No, I would guess it might be, right?
You
30% operating margins on AWS, call it, on
38,
120
38.
38. Okay. So call it maybe 40 billion, let's say, in operating income. Advertising revenue does 56.
It's lower. Come on,
It's
it's lower.
56 billion in revenue. What operating margins do you think they generate on their advertising business?
Maybe 50%. I don't know. Meta
Really?
like. It could
I
be
feel
like,
like it's so low cost for the
well, the cost
e-commerce.
is in the logistics network. If that didn't exist, right?
Yeah, of course. I just mean the pure, like if you look purely at advertising, like what's the development cost to create that ad inventory and have like proper,
The
buying
research, the
marketplaces. There's some
yeah,
development expenses.
I I'd, uh, I'd compare it seems like it would be like Meta, right? At Instagram or Facebook, so whatever they are at something like 50%. It's obviously the 2 biggest profit drivers are advertising and AWS, which are probably the 2. Seeing those keep growing at 17, 18% is a great sign, and I think there is a path to 20% operating margins if they actually get cost discipline, which I don't think they will, so maybe 15% is a better ballpark figure. I mean, look, $2 trillion in market capitalization. What's the trailing 12-month? What 2025 revenue should be what? Like 700 billion, maybe 675 billion. Let's say 700 billion. You get a 10% profit margin on that. That's 70 billion. Okay, you add another 5%. You get maybe over 100 billion in operating income if the margins keep expanding this year. That's a pretty fair price. Seems fairly cheap.
Yeah, I don't really. I am an owner. I own like a couple shares of Amazon. It's a really small position for me, but I don't really know if I'm a buyer here. Honestly, it doesn't seem crazy cheap to me. You said it's what, $2 trillion market cap?
Yeah, give or take. Yeah. I think it's cheaper than Apple, who we're about to talk about, but Alphabet, I think, is cheaper. Yes, with more risk, but I think it's cheaper.
Okay, let me mention a couple things. First of all, earnings season. I assume we're going to name this something like Earnings Palooza. We'll figure out a title after. But earnings season, FinChat is an awesome tool. We use it throughout this episode. It's if you are looking for a financial data platform, if you track this stuff in Excel or Sheets, I'm telling you, I know I used to think I like tracking it. It gives me, a better sense of how the business is doing. I'm telling you, it is such a time saver to not do that. So I really do recommend at least checking it out. You automatically get 2 weeks free if you sign up. But right now, if you're listening to this before the end of what is that, the May 3rd weekend, it's a 25% discount. We're running a spring sale, finchat.io/chit chat. After that, it'll go back to 15%. I'll stop there. Do we want to talk Apple or do you want to hear this interesting quote from the Kraft Heinz CEO?
Oh, let's finish up big tech and then we can get to some other random topics. They came out just now as we're recording. Numbers seemed okay, pretty good. Net sales up 5% to $95 billion. I guess that's what the expectations game can do to you. It's growing slower than the other Magnificent Seven companies, but I thought that they were going to struggle to grow at all in 2025. Operating income was up 6% year over year. So we're actually seeing operating margin expansion. I would think if the tariffs stick around, that's not going to work. I think it's going to move in the opposite direction. If we're looking at geographies, they are seeing strong growth from the Americas and then non-China Asia, as well as their services businesses, which is the software stuff, the subscriptions, the App Store revenue, as well as the default payments from the likes of Google Search. China continues to struggle. They saw revenue decline once again year over year in the country. Wearables continue to struggle. So, watches, AirPods, Vision Pros, not much growth out of there. Stocks at a PE of 34. Seems to be down a little bit after hours, but again, who knows how it's going to react tomorrow as you're listening to this. I look at this and we just took a look at Amazon, Alphabet, and Microsoft. What do you own in Apple for instead of Microsoft, Alphabet, or Amazon? I continue to be perplexed, and they may be running into a huge wall here with these tariffs.
Yeah, I wonder if they end up getting some sort of carve out of like tariff,
Oh yeah, Tim
all
Cook's.
things
Yeah.
tariffs.
Yeah.
Don't they
But
have a
still,
city
though,
in China
still.
that's like called Apple City or something like that?
Oh, you mean the Foxconn stuff?
I can't remember. There's some
Yeah,
city where they
I mean
employ like a
they're moving a
ton of
lot of
people.
those to India, but eh, yeah.
I don't really get the appeal here. I think services might have crossed $100 billion in last 12-month revenue.
That's possible. Yeah, it was about 26, 27 billion. So you could be right.
But yeah, I just think they have pressure from all sides. Like
Antitrust too.
there's the antitrust stuff. There's, I mean, we were already seeing slowing iPhone revenue prior to any sort of geopolitical or like macro headwinds. So just general maturing in that business. Like, are they really going to grow the user base that quickly? I don't think so. I think at this point, a lot of the revenue growth from the iPhone side of things is going to have to come from pricing power.
They have a bit. They probably have a bit of that, but what's going to get you excited there? Upgrade cycles continue to decline. So yeah, there's a comment here that says that Google plans to make Gemini the default AI for Siri on iPhones. I did not see that, but that does make sense given that again, just look at they can't innovate anymore. They can make nice products, but in AI, they are so far behind. It's not even funny. Like it could actually hurt them over the long term. And
AI? You mean Apple Intelligence?
yeah, the Vision Pro was a flop. They don't have anything new. And if AI is as important as people claim it is, I still don't know. It's something that I just like to track. I'm not making a bet in my portfolio for or against AI. Maybe I am if I'm not investing in some of these cloud companies, but it's just something that I don't personally have a viewpoint on. It's such a fast moving market and it could be a bubble, could be so big, we don't even know. But if it is that important, Apple is going to face competitive pressure. I mean, is again, if this Gemini thing as the default AI for Siri makes sense, is Google going to have to pay as much as they used to? With Google search, I doubt it. I really doubt it. And then your phones are going to get year after year after year worse than Google Pixels, worse than Samsung phones. And speaking of China, way worse than the ones in China. Now, that's not going to matter for a long time, but on the edges, it matters, and it matters for your growth rate and market share gains.
Blue text, Brett. Blue text.
I know that is a good moat. Don't get me wrong. But it's not something that's going to drive growth from here. It's going to drive people to stick around with your product. But the people that care about the blue text, 20 to 30 to 40-year-old people in the United States, their upgrade cycles are declining very, very quickly. I know people that still have iPhone, what would it, 10, 9? I mean, this is
Yeah.
where's the growth coming?
Yeah, it's a good question. Someone like, I don't know, 5 years ago said Apple at this point is basically a utility, right? Because the iPhone is so critical to people's lives. Yeah, I think at this point it should be valued like one, honestly, because you're probably going to get
Yeah.
utility like growth. So
Uh,
Yeah, I maybe we are like not the tech forward Apple fans, and maybe the brand is better than we perceive.
No,
But
the brand is good.
if there was a
Great.
huge price increase, I'm not afraid to switch operating systems.
Yeah, but you also have a steady girlfriend, Ryan. No, don't answer that. But,
Yeah, fair.
uh, I don't know if people would switch, but I think they would delay upgrades.
True. Yeah, I think that's
Where it's
fair.
like, okay, well, I have the iPhone 13 or 14. It's not any different than these new ones. If I cared about the tech and I didn't care about that ecosystem stuff, I can move over to stuff that actually has the advanced tech, Pixels, Samsungs, whatever. But if if you only care about having Apple, quote unquote, you can just not upgrade.
Yeah. Uh, what do you say we take a temperature check on this market? Because Apple
All right.
is, I don't know. There isn't that much to talk about except for them kind of being behind the ball, it seems like. I will say the Gemini stuff, maybe it's just because I'm used to Siri, but I never use voice assistant on my phones. Like never.
Yeah,
I make
who
sure to
wants
disable it.
okay, maybe if we're becoming such an antisocial society or something that people start using this in public, but don't use it in public. It's disrespectful. It's not well, I would never do that. Just type it on your phone.
Yeah.
Never do that around people. I've seen people do it at the gym, like, "What are you doing? This is insanity."
Okay. Temperature check on this market. I mentioned it earlier, but most of the commentary has been pretty similar this quarter from management teams, where it's basically every call is something along the lines of consumers are being cautious. We'll see what happens. Our business is great though. They always mention like we're just focused on like serving customers. Like we're, you know, it could impact us in theory, but it would hurt our competitors worse. Anyway, I found this quote from the Kraft Heinz CEO, which is kind of random because I never read their reports and I have zero interest in investing in them. But he said, "Consumer sentiment has reached its second lowest point in the last 70 years."
Maybe for their products.
Do you agree with that?
That cannot be true. You think it's worse than 1974 or 1982? That doesn't pass the smell test whatsoever.
Worse than the GFC? I
Also,
doubt
yeah,
it.
worse than 2009 also does not pass the smell test. I think Kraft Heinz, though, is just something you don't touch. Have you seen the news with the new Ozempic stuff? Like, it's coming on all the telehealth providers. It works. Eli Lilly might have an oral pill coming down the line, which one of the big headwinds for adoption of the GLP-1s is the fact that you have to inject it, and people don't like that. I mean, I personally wouldn't like that. Kraft Heinz is not.
The barometer of the economy.
No, it's not the barometer of the economy. It's also online shopping has really hurt these brands. I don't. Why would I have loyalty to sugar tomatoes? I'm 28 years old. I'm not 5.
I think yeah, sure. Yeah, that's fair. I think we're seeing a lot of companies, especially consumer-focused companies, and I saw it especially in the restaurant space, that are producing bad results and using tariffs as the scapegoat. And which is funny because it's like they're saying, "Oh, consumers are cautious because of tariffs." It's
Nah,
like
look at Visa and Mastercard.
no one cared about tariffs during the quarter that you are reporting for.
Visa, Mastercard, and Amex. What? I don't remember Mastercards. Maybe Mastercard's even better. Visa's 9%, Amex 7%, and what was Mastercard? I'm sure right around
9%.
Visa's.
Mastercard was 9% as well. Yeah.
That's the
Now,
spending.
you know where that's going? Guess what? Guess who has had the best comp sales of any company I have seen so far?
All right.
Taco Bell. I don't know if
That's
they just
a
had a really bad last year, or maybe
uh,
they're just such a
I don't know if that's a
value for consumers.
Yeah, I don't know if that's a good barometer of the health of the economy. I'm gonna be honest. That's if people are going to Taco Bell more, that's pretty cheap stuff.
McDonald's, rough comps. Starbucks, rough comps. You pick your restaurant here. I think we're seeing rough
Chipotle.
comps. Chipotle was flat year over year. Actually, I think it was negative. Technically, it was like negative 0.4% comp sales. Taco Bell. The Chipotle to Taco Bell trade down is alive and
Yeah,
well.
exactly. McDonald's isn't cheap anymore. I think there's companies out there, and Starbucks has different issues. Maybe I'm thinking more of just Seattle only, but the fact that you have drug addicts just in your store, like that's not going to help with your brand. But McDonald's took too much on price. They did.
I think that's fair.
I mean, when McDonald's is the same price as a Portillo's, that's part of my thesis, and doesn't for owning the stock, it's not the entire thing. But when a Portillo's or even a Chipotle, I guess they had a bad quarter. Some other companies out there, Chick-fil-A's, when they are the same price as McDonald's, I think more and more people are going to go to those options as opposed to McDonald's because that's not the everyday low price provider anymore.
Yeah. They talked a lot about trying to be like the value brand again that they were. I think they even talked about, maybe taking price a little bit too much last quarter. But I haven't seen any big changes. Like average ticket, I think still continues to grow. So it seems
Yeah.
they've done all this it's mostly reducing promotions across their locations, and ultimately that drives up average ticket, which when you're a consumer and you're thinking, I spent $20 the last couple times I went to McDonald's, maybe I will just go to Chipotle,
Also,
or in this case Taco Bell.
Ozempic. I think we're at the point where these products are being under what's the little cycle? The Gartner hype cycle? We're kind of going through the trough where people are forgetting about it, even though it keeps growing. And if these oral again, I'll mention if you can take it in a pill, it's gonna grow like crazy. Um, and McDonald's has to be hurting because of that. I mean, just look at the
Yeah.
data that they provide. The studies that have been done show that you're spending on potato chips, you're spending on candy, and you're spending on fast food drop by like 30%.
Yeah.
I mean, come on, you can't look at that and invest in these companies.
Starbucks, talking about them, minus 2% comp transactions. So transactions declined 2% across the company. It doesn't sound that bad considering that last quarter, I think it was like -6. They even got to -8 at one point. But this is lapping a year ago when they were having -6% comp transactions. So it's
Yeah.
technically getting worse, although the trend is getting a little better. I still have some belief that Brian Nickel can turn this around. I mean, I think you got to give him more time, especially if you're a shareholder. But I really think the focus they put on digital ruined a lot of the customer experience.
Yeah. I think Nichols a great CEO. His track record is fantastic about Taco Bell and Chipotle, but I don't care about this stock. It's similar to McDonald's. Like, it's so, what kind of returns am I going to get owning this thing? Okay, if it works, what, 2x, 3x over 10 years? That's good. But
You'd rather own Luck and Coffee, right?
yeah, that's actually a good question at this point.
I mean, it's okay. For any context, for some context for listeners who do not know what Luck and Coffee is, Luck and Coffee is this I think it's a relatively new concept in China, probably started within, I think, the last 15 years, where it's very focused on like grab and go type of coffee. And they had apparently super fraudulent numbers like 5 years ago, and they got exposed for it by, I think it might have been Muddy Waters,
Yeah, but
some short
they were
seller.
just way smaller than that people thought. Like they were actually profitable, but just way smaller.
Yeah, they were lying about how many transactions they had by like they were saying they had like double the transactions that they did. But they're still around and apparently growing really quickly. And actually, on the last conference call, Brian Nickel came out and said, like, I did not realize how much the competition had developed in China, and that it's a very different competitive landscape than he initially anticipated. So maybe there's some legitimacy there. Maybe Luckin Coffee, as much of a joke as it kind of is, because they're kind of considered a fraud. If there has been a turnaround in ethics at that company, and you're willing to invest in China, it could be worth a look.
Maybe, yeah. No, let's say we don't know, like all the executives this week. You know what food company, Ryan, is doing well? Our favorite psychological long, Sprouts Farmers Market. 11.7% comp store sales growth in Q1, 19% sales growth, operating margin expansion, and more share repurchases and plans to expand throughout New York, all the way, kind of doing that. I know the Rust Belt might not be the best term. People don't like that, but the states from New York through to Illinois. So Chicago is coming soon, I guess over the next 5 years. Rock solid company. I wonder what the stock's doing today. I think it might have been down, but that's just because it had been up so much. Oh, actually, no. It's at 172. Yeah, just a great company, Ryan.
I believe we started buying this around $17. I think this would be close to our
A
first
psychological 10 bagger.
theoretical 10 bagger.
Yeah, that's sad. Hopefully I can have a real one someday. Yeah.
Yeah, those are really good results. I took a peek at them. On the, we talked about the big fast food chains struggling, maybe because of the impact of Ozempic. This might be on the opposite side of things. Maybe they're a beneficiary. And the operating margin expansion is really impressive. When we initially got into Sprouts Farmers Market, we're talking about it. That was kind of one of the biggest points of contention, is pretty much everyone thought the margins weren't sustainable, that they had been elevated due to COVID and some of the increased shopping that happened, and the cooking in as opposed to going out during that time frame. And they have proven that the margin expansion and the superior margins are sustainable. For context, they generate about, I think it's just over 6% operating margins versus the typical grocer at around 2 to 3%. So significantly more profitable because they cater to different individuals and they sell different goods.
Yeah, you're negotiating with a random farm in Colorado, not Coca-Cola. You can get better pricing. Uh, I will be interested to see how this concept does during a recession, because given their whole part of their value is sort of like the Trader Joe's, where we're going to have very good prices for you, and the price differentiation between them and a Whole Foods, or the Whole Foods equivalents ones that you have in cities across the country, is much higher. So I wonder if there will be trade down and that will benefit them, but time will tell. Do you want to talk about another psychological long, Ryan? Maybe we have some advertisers we have to talk about too, but I want to talk about Spotify. Stock's at what, 600? Maybe not. It seems to be doing quite well. Yeah, 600. I don't know. You have the numbers for Spotify, so go through those, and if we have another advertiser, maybe time to hit that as well.
Yeah, let's talk about Blue Chippers Club first. We've mentioned it on the show a number of times, but Blue Chippers Club was started by two friends of ours with the goal of building a tight-knit community of stock-focused investors. Inside this community, everyone gets to share and break down their portfolios, pitch stocks, receive feedback, and can participate in weekly calls. I really do like these weekly calls, and I think if you like listening to our podcast where we're kind of bouncing ideas off of one another, it's similar. Like you get the chance to bounce ideas off of other investors, hear ideas from them, give feedback. I just think there's a lot of value in a community like that. So if you're interested in signing up, go ahead, head on over to bluechippersclub.com and hit apply. The link will be in the description. That's bluechippersclub.com. All right, Spotify numbers. Pretty solid quarter all around. There wasn't anything in particular that stood out to me. They beat on subscribers. I think they added, the estimate was 3 million. They added 5 million. They surpassed revenue and earnings estimates. Social charges weighed them down, which is kind of a thing you don't see a lot with American companies because it's mostly a European thing. But I believe it's like sort of
Yeah,
like
I know
a
what I know what it is. If the stock price goes up, they just have to bank that on employee compensation
right,
for what's going to happen. So it's a non-cash charge, and it's going to fluctuate with the stock price.
related to the stock-based comp. So they're accounting for it almost at a mark to market, right?
I was on mute there. Yeah, I think somewhat. I don't know the exact details, but I just know that there's a correlation between if the stock price is going up, it's going to be hit. It's a non-cash charge. It's just a different way to account for stock-based compensation expense. I really don't. To keep it less complicated, I kind of just look at gross and operating margin and don't even worry about it since it's a pretty small figure.
Free cash flow over the last 12 months is $2.8 billion, I believe, euros, actually, I think, which maybe that's becoming a bigger difference than it has been in the past. Maybe it'll actually, I haven't really kept up with the currency translation there, but for context, they were doing $200 million in free cash flow, I believe 3 years ago. So they've seen just rapid margin expansion. I'll kind of give the floor to you. I didn't think anything really stood out here. They solid progress. At this point, they just continue to grow the business in a pretty impressive fashion. And the number ultimately the number that matters is users. And I think we've seen that they have the ability to focus on profitability when they want. Now, it seems like maybe it's kind of become religion for Daniel Ek and that he's really got his eye on the ball. Maybe he has all this whole time, but you really saw it last year and we're seeing it into the start of this year as well. I guess, first of all, any thoughts on the quarter? But second off, discussion question. I think we both sold Spotify following, or we never bought back in. Like, so when we shut down the fund, transferred some money, started buying things again, we never bought back into Spotify. If you had bought then, which I think the stock was around 170 or $180.
I think it would have been higher, but still
Okay.
pretty significantly lower than today.
Do you think you would still own it today?
Yeah, I think so, given the runway for growth. There's just a long runway for this company to reinvest in. Hopefully, someday to get to a billion, not just a billion MAUs, but maybe a billion paying users. Now that's pretty audacious goal, but yeah, there's room for this business to grow and grow and grow. And I like the management team, founder led. So yeah, I think I would still own it. It's one of those where you have to look at, okay, is this a low growth business that's trading at what would it be at this point 40 times earnings, or is it someone that can double, triple, quadruple the revenue over the next 5 years? If it's the latter, then I like it better. But speaking on the quarter, most I think important thing is looking at marketing expenses where they I think declined or didn't even grow, but they're still able to add and compound those MAU acquisitions, new subscribers, stuff like that. So the efficiency there would make me happy. And besides that, nothing too crazy. Seems steady as she goes.
Yeah. I don't know if I'd still own it here. It seems really expensive. I just don't see, like, we've seen great margin expansion. I think we're at what? Just north of 10% operating margins?
Yeah, correct.
15 maybe is achievable.
Oh yeah. Oh yeah. Definitely. I mean, they're still getting a major headwind from advertising. So if they figure that out, which that's one that's been kicked, the can's been kicked down the road. What do you got here? Market cap, $124 billion. What's the revenue? I guess I should have that pulled up on FinChat. Do you know off the top of your head, Ryan?
I don't. Well,
Let's say they
let's back
can.
into it. 10%
Let's say they'll
operating
get.
margins, probably
Yeah, let's
around
say they
20
can
to
get to
30 billion.
30 billion in revenue sometime soon, and you can get 15% margins. That's $4.5 billion in earnings. So let's round that up to about five. at some point within the next 5 to 10 years, give or take. That's what, 20 to 30 times earnings versus the current market cap.
20,
So I don't
20
think
to
that's
30
crazy.
times 5 year out. It seems expensive to me.
Yeah, it's expensive, but they have. I think they have such a long runway to grow. Is what would probably keep me around from maybe trimming, but not taking out the whole thing. Because if this is a company that, market cap's 100 and something billion dollars today, this is something I think can get to 500, $600 billion market cap eventually, which is, I don't think, crazy to assume. Mm, You probably don't want to cut off that right tail as opposed to something that, it's not growing that much. Why would I keep it around?
True. Yeah, I think you do get when you have a advantaged business that has great brand value with customers and huge runway for reinvestment, selling it early tends to be the wrong decision. I think if you really got a lot of upside here from the stock in the next, call it 10 years, my guess is that it would come from some sort of renegotiated deal with the labels where you get higher gross margins. Because there's
Well, that
still the ceiling on gross margins currently.
Ryan, I hate to break it to you, but I think that's already happened. And they're about to launch the super tier.
I heard rumors of it, but I did not realize that it was official.
Well, they don't announce it. They always say, "We're in good relationship." It's never
Yeah.
been better.
The
Yeah, I mean,
super
look, the
tier,
stock's expensive. Am I buying here, Ryan? No. But
but
yeah,
psychological long.
still, well, yeah, the Spotify Bears, I guess, were not correct. We didn't end up making too much money on it, probably net losing a little bit at least. But the people that said at under $100 that it was going to zero, I just think that you weren't looking at the business correctly. We have a question here. Good afternoon, Chit Chat Bros from John Gallegos. I think he's on Blue Chippers as well. Am I correct? Yeah, yeah. So a lot of listeners on over there. Anything on the Berkshire pilgrimage? Went in the last 2 years and lots of fun, and just signed up for FinChat for a 25% savings. Hey, love that. That helps us, gives us a little kickback as well, and we appreciate the people doing that. Now is the time when we've seen lots of people using that link. On the Berkshire meeting, unfortunately, neither of us will be there, but we've had some people reach out, so maybe hit us up on Twitter and we can connect some people if need be. I know there will be some people that have been on the show before or that run some podcasts that we work with that will be there. So if you want to meet them, that'd be great. If you're someone that's going by yourself and haven't really met people in real life, but besides that, I don't think you're going to need our help. There's so many people there you can find really anyone to
Yeah.
talk to.
Go walk
Ryan?
into any restaurant or brewery. There's plenty downtown in Omaha,
Yeah.
and you'll run into plenty of anonymous FinTwit accounts. And
Blue suit jackets, sport coats,
yeah, I mean, the city is Berkshire shareholders for the most part this weekend. It's
Yep.
I do want to go again. I it's probably not I'm probably not the person that will go every year. I know a lot of shareholders love it. They go every year. That's probably not me, but it's definitely a fun chance to connect with like-minded people.
Yeah, we need our consumer balance sheets to get a little higher. I heard, though, that
True.
someone said that the easiest way to go is actually on the Amtrak, just given those flights. No, like, you fly to a nearby city, hit the train. But, yeah, hopefully, it'll be a fun meeting. Yeah, definitely. The meeting itself, I wouldn't say is that enjoyable, but it's everything around the meeting. All right. We got a lot of other earnings we wanna hit, Ryan, before we get out of here. Maybe Evolution? Stock's down a bunch. A lot of people asked us to talk about this one.
Airbnb. We got to talk Airbnb.
Okay.
The travel
Airbnb first.
economy slowdown, which
Yeah,
is
7%
happening.
growth for booking in Airbnb. I don't know if that's a slowdown, is it?
Well, I mean, it's a slowdown in growth.
Fair. Okay.
Pretty significant slowdown as well. I think it's about half the growth rate that they were generating a quarter ago, but it's slightly lumpy. The booking holdings grew their bookings 7.2%, which is also it's a slowdown, just like Airbnb. And you're probably going to see kind of like the cloud providers at this point. I think you'll see generally similar trends in bookings growth for the two brands. But Airbnb grew their bookings 6.9%, slightly slower. So I wanted to run this idea by you. Question, I guess. And I asked this last time. Why own Airbnb instead of Booking Holdings here?
And my answer would be the same. It's because Airbnb is purposefully making their stays cheaper.
And
So
room
for the
nights
near
are growing
term,
faster. Airbnb's room nights are growing faster percentage basis.
than Booking, and Airbnb is still not globally available, and they have not, which they're about to this month, launch new products outside of the core experience. So when we have, and I was just pulling up the letter, I'm seeing I think 20% plus growth in Brazil, Latin America as a whole, as that is at I think 20% ish growth, Asian Pacific 15% growth. I think when you have that included in there as context, also when they're about to launch these new products, also when they are purposely trying to make it more affordable on Airbnb, uh, which is going to hurt. I think, it's going to hurt bookings growth in the short run, but is taking care of their customers over the long term to build up that brand. Yeah, I would still argue owning Airbnb is better than booking here. And when founder led, I think you can't discount that.
Yeah. For Airbnb just passes the gut check. It really does. Like the user experience to founder, owner, operator, even if the results right now are slightly worse than Booking Holdings, I think it's one of those where it feels like it has a much more promising future. And I can't put my finger on exactly why. Maybe it is like you talked about, the lack of international exposure so far, or the ability to grow abroad, but we'll see. It was a little bit of a, it seems like there's kind of a travel headwind and some concerns around consumer
Yeah,
spending on
airlines
travel
too.
overall. Yeah.
Yeah. Although I did see, now this leads into the Mexican airports, which we should talk quickly before we get out of here. Evolution and Mexican airport, Grupo Aeroportuario del Norte, OMAB, because people specifically asked us to talk about them. But this was I think, confirmation from Airbnb that this Canadian travel boycott actually has some legs. Quote, for instance, nights booked by Canadian guests to destinations in Mexico increased 27% year over year in March. Additionally, global year over year nights booked from Canadian guests in March was higher than in Q4 2024. So that is in relation to Canadians skipping vacations in the United States, and they're going to other countries such as Mexico. Yeah,
Music
not
to our
bad.
ears
Music
for
to
the
the
Mexican
Mexican air.
airport shareholders.
Yeah, exactly. Do we want to do evolution or OMAB first?
Well, I mean, how much did you read the evolution report? I didn't read it.
I mean, I skimmed it. This was, I think, the gist. Revenue and earnings were flat because of what they called regulatory upkeep. I think they were forced to do because they were unlicensed operators for their casino games that were shut off due to a United Kingdom investigation. They're still launching new games. They hope some of these players come back. And the stock collapsed. Collapsed is always a tough word to use. It dropped 20%, I think. The stock now trades an EV to EBIT below 10, Ryan. We think they might be decent capital allocators. What do you think? Is now finally the time to take the leap and own Evolution?
I've always had a bad feeling about evolution. I don't know what it is, but like there's something there that I don't like, and I can't tell what it is because I like the business. The economics are fantastic, and it's a promising industry. Promising in the sense of like dollar volume will grow.
Yeah, and I'm promising for their dollars.
Maybe it's like, maybe I finally have some morals in my investing, and this is where I draw the line that I don't like the idea of spend to online casinos growing so much, but there's just something about it where I kind of get the ick. the investment
Yeah.
ick.
Well, the true online casinos are crypto. I've seen that. It's quite terrible. Yeah, this one seems cheap. I feel like it works really well from here, but
It probably will. Yeah, I agree.
yeah. All right. Before we get out of here, someone specifically wanted to talk about the OMAB earnings. It's the Northern Central Airport in Mexico. So I can go through these quickly before we get out of here. Revenue is up 15.6% compared to 9.1% traffic growth, 18% operating income growth, commercial revenue per passenger up 12.5% year over year. And remember that the new contract negotiated with the Mexican government is not coming until 2026. So that will not be reflected in the earnings yet. And the stock is still around 10 times earnings. There are, and this is not my opinion on whether this is good or bad, I should say fair warning since this is a very politicized issue. There are fairly rich Mexicans compared to the average Mexican population coming back to Mexico from the United States, plus international travel, skipping the United States can help with their traffic growth. The longer that tariffs stay around on China, the longer it is good for companies to invest in manufacturing in Monterrey, their most important airport. I think all positive right now. Now there could be some headwinds eventually, but this is a great business, I would argue, and one that'll get through any sort of downturn. But at the moment, it seems all positive. Up, up, up.
Yeah, it seems from what I see online, I haven't been abroad since all this tariff news, but seems like there's kind of a general disdain for the US at the moment from a lot of countries globally. And if that impacts their travel decisions, this is a company that benefits. If you're thinking about going to the US, you want to adjust it slightly. Mexico, you can get the great beach vacation and all that. And
Or
um,
you can get a nice city vacation for about 10% of the price, Ryan. How would you like that? That's more my style.
yeah, I guess if you love the sights of Monterey, that's an option
Well,
too.
yeah, I guess, yeah. Their portfolio, not, uh, yeah, I guess isn't the best, but the other one, Pacifico, Guadalajara, Cabo, maybe not Tijuana, but
But
yeah,
I mean, all the Mexican airports, everything that's happened over the last few months, they're a big beneficiary, I imagine.
yeah, or at least they're not going to be hurt yet. Now, if the global economy goes into a depression, well, all bets are off. But so far, so good.
Yeah. I,
So far,
we'll be
so
having very
good.
different discussions. There'll be other problems beyond your OMAB investment.
Yeah, exactly. All right. I think that's it, Ryan. We might be going long. I don't even have the timer in front of me, but I'm looking at the clock. Anything else before we get out of here?
I think that's gonna do it. Thank you everyone for tuning in. We missed the bubble watch this week, but there was so much news to get to. We maybe we'll
Yeah,
save it
it's a
for
fun
next
one.
week.
Anthony Pompliano has a SPAC. BlockFi guy has a SPAC, and that I think is just is good. It's
That
fun.
is going to do it. Thank you, everyone, for tuning in. Thank you for everyone that added some comments in the chat. We want to remind everyone that Brett and I are not financial advisors. Anything we say or discuss on this podcast is not formal advice or a recommendation. We may buy, sell, or hold any of the securities discussed on these episodes. So please do your own work. Thank you all for tuning in, and we'll see you next time.